For more on Groupon's latest moves in the context of their quiet period, let's bring in securities lawyer Matthew Swartz. He's a partner with Pillsbury Law and comes to us from our Washington bureau. So, Matt, this does seem a little funny, but at the SEC, is this going to be no laughing matter? Is Groupon going to get in trouble for all of this?
Well, I don't think the talking cat is violating the law. I'm sure there are some people having a good time with it at the SEC. I think there have been complaints to and about the SEC over the years. I think this would probably be the first time they've ever been asserted by a talking cat, so they're certainly going to take notice of that. I think a lot of us who practice securities law and have experience with IPOs, I think, found the more striking moment to be the statements that were attributed to the person you mentioned in our introduction, asserting that Groupon will in the future be wildly profitable. I think that's the statement that has the SEC and its lawyers turning in their beds at night.
But take a listen to some of the things they're saying. Quote, here are some traditional hazing rituals you can use to torture companies in a quiet period. Wait until the company is sleeping to smear Scream-activated bees on its face. They're not supposed to be responding to the media, and yet they are, in a way.
I think in a way is the key way to say that. I think you have to understand the context of the quiet period. The purpose of the quiet period is to ensure that once a company decides to go public, its communications that involve selling its stock have got to be regulated by a prospectus. The legal requirements of a prospectus allow the SEC to approve the statements that the company makes about itself prior to the company selling stock to the public. A quiet period exists so that companies can't say things outside of the prospectus that they wouldn't be allowed to say inside it. Now, when a company makes a statement like, we will be wildly profitable, if that were inside a prospectus, the SEC would probably not allow the company to say it. But if they did, they'd require a lot of substantiation for why that's true. The point the SEC is making is if you're going to offer securities in the United States, you better be able to back up the statements you make in selling those securities. I'm not sure the talking cat is directly aimed at selling securities. I think what they're doing is making fun of the process. Do I think that's a great idea to make fun of the regulators? You know, maybe not. But I don't think it's per se a violation of the quiet period.
If you were Groupon's lawyer, would you advise them against this?
I think we can safely assume this was not the lawyer's idea. I think the number of times that you have the public relations department and the securities lawyers agreeing absolutely on the best strategy for the company are few. And I suspect this one did not come from the securities lawyers.
Well, CEO Andrew Mason is known for his humor. I want to bring in Cory now, who's poured through Groupon's S1 filing and knows everything they have said already. Cory?
Well, yeah, I mean, it wasn't just asserted that Eric Lefkowski said it. He said it to me sitting at this desk on this phone, that the company was going to be wildly profitable. As you point in direct contradiction to what's in the SEC filings, which say the company may not ever be profitable. But let me ask you about that. You know, you're saying the SEC lawyers didn't do it, but Eric Lefkowski has got a blog. Somebody at Groupon was blogging about the quiet period. Did the executive chairman know it? Or maybe he didn't know it. Either way, isn't that damning?
Well, I wouldn't call the statements of the talking cat damning. I would say, again, they don't violate the law. The question about what the company's future prospects are is a lot closer. I think that has probably given the securities lawyers involved in Groupon's offering a lot more to think about than the talking cat. I think the talking cat goes in the category of, you know, perhaps a step the securities lawyers wish they didn't have to take, because, again, I don't think the SEC enjoys being mocked. But is it a violation of the law? I doubt it.
Mocking by a talking cat, I don't know. This could be set new legal precedents. It is not a precedent for me to quote a talking cat on this show. Sadly, that is a true statement. But let me quote the talking cat. This is what they did say very specifically. They said, quote, the quiet period is the time right before a company goes public, during which it's legally prohibited from saying anything to the press that might make the company look, quote, good, quote, successful, or, quote, not currently on fire. It seems to me that this is very specifically saying, hey, wink, wink, nudge, nudge, the company's doing great, we just can't tell you.
No, there may be some truth to that. When I think the SEC and other securities lawyers look at quiet period issues and whether a particular statement constitutes a violation of the quiet period, there really isn't a bright line. And I think they probably did think pretty hard about how much they could say without clearly stepping over the line in the quiet period. And I don't think this is a case with the talking cat that they clearly stepped over the line. I think it's more clever than that. Again, as I said before, this was not the idea of the securities lawyers. I feel very confident in saying that. But as a securities lawyer, I guess I also feel pretty confident in saying this is by no means a clear violation of the quiet period.
Well, let me ask a question differently and really quickly here. Does this make it more likely that the SEC is going to take a closer look at the Groupon offering?
I don't think you could have made it more likely after what I understand was said to you on your show.
So, you know, the SEC rules are there for a reason. But from Groupon's perspective, they've been pummeled in the media. There was a post on TechCrunch about how Groupon is poised to collapse, and yet they can't defend themselves. Is that fair?
Well, it's probably not fair. But again, in U.S. securities offerings, the principle is to protect investors from statements that, without justification, promote the company's prospects. And the idea is that investors have got to have a full and fair picture of the risks and opportunities associated with an investment. If that means occasionally companies who are getting undue publicity because they're having an IPO are restrained in some way from rebutting some of the negative side of that publicity, then I think it's so be it. But I think one of the interesting things we see with a company like Groupon, which is a consumer-oriented business, is that the executives at Groupon succeed in part because they can stand out from the crowd. They can say and do things that attract attention. And it's just a rare situation, and the registration for an IPO is one of them, when saying things that excite interest in the company causes you problems. Normally for consumer product companies, that's a good thing. In the context of an IPO, it can be a real problem.
All right. Matthew Swartz from Pillsbury Law, thanks so much for your insight on that. I'm sure Groupon will continue to make news.